A big round of applause, please. देवी और सज्जनों, तालियां बरसती रहनी चाहिए.
We are very glad that in this inaugural session, so many important persons from different institutions has joined. Mr. Sujoy Kumar Jadhav, GM2 SBI, I welcome him. Mr. Prakash Kumar, DMD SIDBI Mumbai, I welcome him. Srimati Usha Ramesh, CGM NABARD, I welcome her. And Dr. Satyajit Dev, GM RBI, Regional Office Kolkata, I also welcome him. At the same time, we have Mr. G.G. Menon. He is the MD of Shadhan. So, today it is
Microfinance. MFI as such is supposed to be unsecured lending because the places or the people which AMFI or which microfinance MFIs serve, they don't have any asset per se, which can be offered as collateral. And against that backdrop, the kind of successes and the kind of uplifting of people from the below the poverty line to actually working class and people who are managing their life in a very sustainable way is credible. But before going further, I would like to only dwell upon one thing which I found in Hyderabad, an organization which has actually dwelled upon the topic of leapfrogging. It was a NGO and it was helping out people who had left schools, classes or orphans who did not have any formal learning, and at the age of 11 or 12 they didn't know basic alphabets. The normal way of thinking was that you start these children to go to class KG and all. That is not going to help. A small capsule kind of training was given to them, these children, and they leapfrogged to their class level, be it class 6th, class 7th, within a period of 6 months to 7 months. They are not very intelligent or doing very good, but yes, they are now actually, they have learned alphabets, they have learned how to make sentences, they now know how to add and subtract and basic signs. And then now they are ready for any technical training and all.
Now, SIDBI has been always there with the sector. There's no formal role adopted by us, unlike NABARD, who used to claim ownership of SHG Bank Linkage Program, but we have always been there with the sector. And it is not only lending which we have done immense capacity building of the MFIs when once upon a time we used to give technical assistance with the help of these support that we had, capacity building assistance to the MFIs. The capacity assessment rating was introduced by SIDBI when we felt that other banks should also come and start lending, because giving unsecured loan to an entity without any security, it was not easy to convince the banks to come over and start lending. The code of conduct assessment to push the fair practices code in partnership with associations like MFin and Sadhan, and so many other activities. I can keep on listing them out here, but that's not the objective. It's just to give a background. Now, as we stand today, it has been almost 30 years of microfinance. I just like to highlight a couple of things which is very close to my heart, and I've been talking about this on the recent all the microfinance.
Industry is really flourishing in West Bengal. And I think there are a lot of stalwarts present here in this audience who are the reason behind the huge inroads that the MFI industry has made in West Bengal. And let me tell you, if you weren't there, then I think the banking industry, banking would not have reached out to these, unreached places in West Bengal. So you made a huge contribution to reaching credit to the most remote places of Bengal, to the most unreached people of West Bengal.
The pivotal role of microfinance in empowering the poor and catalyzing sustainable development in our region and beyond. Microfinance, with its root deeply embedded in the philosophy of financial inclusion and social empowerment, has emerged as a powerful tool for uplifting the marginalized sections of society through access to small loans, savings, and other financial services. Microfinance institutions have been instrumental in providing the underprivileged with the means to break free the shackles of poverty and build a better future for themselves and their families. However, as we celebrate the achievements of the microfinance sector, it is imperative to acknowledge the challenges and issues.
I feel that probably there was a need to go into a next level of development. Of course, we have been able to bring the poor people to the banking fold or the financial fold. But what is the next step? So probably that is where the SIDBI's initiative of that we lead, that is women enterprise, developing the enterprises. So that's a wonderful initiative. I'm thankful to SIDBI for giving Sadhan also an opportunity to work on that. We are working in 2 states.
This is about the new microfinance landscape and what are the opportunities and challenges. So I'll speak the least. These gentlemen are there. You will hear from them. It's a very well-crafted panel. Kuldeep represents the industry. Gigi sir represents the industry on a macro level, chief of an SRO, and finally Aditya, he tracks the data and says. Change number 1 is this: microfinance needs to be interpreted at microfinance, not who gives the money, which means the arbitrage which was happening, the banks were doing, the difference between banks and microfinance are no more there. So the rules are the same for everybody. So that's the most important part, the level playing field. Earlier what was happening, how much a bank of microfinance, Ashit Babu, please. Earlier, what was happening, microfinance had their restrictions, how much they could lend, etc. Banks had a free run. And on many cases, we had seen that banks were exploiting this opportunity, taking the advantage of arbitraging. Now RBI has stopped that. That's the most interesting part. Second part is this microfinance, and that's even more interesting. And I think everybody welcome this with dancing. The microfinance are now free to fix their loan rates. There is no restriction, nothing whatsoever. And which is why I think Prakash Saab was talking about the reference to the exploitation of the higher lending rates. Reserve Bank of India and Finance Ministry have continuously been talking about that. They had not said in as many words, but the tone is that microfinance entities are misusing their freedom. Of course, the defense from the microfinance industry is this: from our COVID days, we have to get out of it. We had to accumulate a lot of bad assets because of that once in a century event. So give us some more time. Let our balance sheet be strong, and then we'll get back to you with the lower rates. And then of course how to manage the risk, how to get how much money you can give it to them. Those are also those metric also changes. But I don't want to talk more. I will hear them. Gigi Saab, I am keeping you at the last from the round because you have a bird's eye view of the entire thing. So let's have Kuldeep. You run an organization which is I would say medium size, about what, 1150, 200, 1200 crore, and have been in this business for quite long. VFS is probably the oldest in in this. So BFS has seen both 2010 the changes following Andhra crisis and now 2022 changes. I was not very sure whether you are involved in the 2010 change with involvement in BFS. But tell us, sitting from your chair, how the industry has been using or misusing all these changes. Be honest.
Yeah, VFS Capital as because it is one of the oldest entity in this region. So we have seen a lot of changes for the last couple, maybe more than 2 decades. I think when we started microfinance, there was no regulation at all. Even we can recall that initial discussion with RBI when we used to tell them that we should have a separate policy for us, for the microfinance sector. So they said, no. I mean, it is too small to regulate, so let's focus on the growth. Once the industry comes to a stage, then we can think about the regulation. So that time, there are other distinguished guests also told that most of the MFIs who started in the year of, in 90s or 20s, so they used to take savings. Because we used to believe that, and that time even in the SHG model, so they used to save for a couple of weeks, and we used to see the savings habit, and then only accordingly we provide loans to them. But from there, I think the problem in the sector is what we have seen, that it is very, very politically sensitive sector, because whom we are working and the target people for the politicians, it's same. So we always a bad name for that. But it is also fact that, in India, so there are so many ports are there. So without microfinance, the development cannot happen. And when our Honorable Prime Minister is talking about 5 trillion economy, I think if we remove the microfinance sector, bottom of the pyramid, it is just going not to happen. So, does it mean that anybody is having more than 3 lakh rupee annual income became above poverty line? It is not possible. So that means, as a MFI, you are not allowed to give loan. Those are having above 3 lakh rupee, but they need loan. So what is happening? Neither they are going to a bank, nor they are able to get loan from the MFI sector.
From a bureau, so I'll put a bit of data and analytics in what we are seeing currently of the industry and what we see if we crystal gaze a bit, right? So currently the overall industry would be around about 3.5 to 3.6 lakh crore as a portfolio outstanding, right? However, as we go into this year, that is 2024, we will see a quarterly about a 1 lakh crore portfolio outstanding per quarter, right? Which is an amazing growth for the industry. That is the good story. However, if we see that this growth is predominantly coming from the increase in the ticket size. So ticket size, which was earlier 38, 37,000, is now going north of 45,000. So more and more is being given to existing lenders in second cycle, third cycle, fourth cycle. And the population of new to the ecosystem is fairly weak. So though there's a good story.
You are saying the portfolio is growing, but the number of borrowers not growing in a sync of this.
Yes.
So you run the risk of people being over leveraged.
Yes.
And MFI industry is encouraging it, or how does it work?
So I just have the data.
Bole?
So one of the reasons, and as I said, I will just speak from a data and analysis perspective. One of the reasons is that another symptom we see that there's an extreme high concentration in terms of lending.
To have a policy approved by the board, not only approved by the board, I would suggest that the policy should be reviewed by the board. See, just because you had a policy around 2 years back, as Tamalda said, that doesn't mean that it should be continued. It should be reviewed. In fact, the interest part of it, it is a fact that microfinance sector is a costly sector. If anybody gets an opportunity to borrow from the bank, definitely that's the best option. There's no doubt about it. But how many people are able to borrow from the bank, especially the target group which we are talking about? How many of them can go and get a loan from the bank? That is number one. So if that is not happening, then what is the next option available? They will be going into some kind of informal sources or money lenders and get themselves fleeced. So a via media kind of a system is what we are looking at, but then that should not be only for the purpose of lending. And we have been seeing that microfinance sector has a social DNA in them, it has social background in them. In fact, we know how Kuldeep's company and all have come all the way. About 30 years back, they started as an NGO, and that NGO DNA still continues. In many of the MFIs, that continues. So it is a situation where in the organization is able to provide loan, but they are not able to provide in a loan in the way the banks are giving because of various reasons. One is, of course, the borrowing cost. See, I was telling earlier also, in other countries, including Nepal, Bangladesh, or Cambodia, wherever it is, they can take savings from the members like we do it from the cooperatives. Cooperative societies can take savings from their members. So
The story is for the state of West Bengal. We heard the previous dignitaries saying that the sun rises from the east. So, we are going to show you that story through data. While, the current state for West Bengal is not looking that great, like, Mr. Tamal Bandyopadhyay was speaking about, but it is showing good signs of recovery, and we feel it's going to make a great comeback. So with that having said, I'll start with some of the information that we have for you.
And abroad. A very good afternoon to all of you. As they say, I have a dream. I'm sure all of you share the dream, and this dream has been weaved by none other than the Honorable Prime Minister of India, that by 2047, we want to see the country as a developed nation, Viksit Bharat. The immediate goal is 5 trillion economy in a couple of years, followed by a 30 trillion economy by 2047, when we expect the country to be a developed nation. I'm sure all of you share this dream. Possibly it may happen in our lifetime if we are alive by that time. And for that to happen, recently, possibly all of you must have seen this data released by Niti Aayog. 24.8 crore people have come out of poverty in the last about 10 years. And that's a huge number, and I'm sure the role of microfinance institutions in this journey, in this transformation, is definitely something that the country counts on. And going forward, somebody was talking about leapfrogging. One of the speakers in the inaugural session was talking about leapfrogging. I'll tell you something. Today the entire government machinery is looking forward not for leapfrogging, it wants pole vaulting. So the country, if we have to reach the Viksit Bharat goal by 2047, we have to pole vault. There is just no room for leapfrogging. Leapfrogging is past. Possibly we have been leapfrogging since many years now. Now it is time for pole vaulting. So there is another development.
Welcome to West Bengal, a state pulsating with diversity. Today, join us in exploring a groundbreaking project, We Lead, an initiative that empowers women through entrepreneurship. In We Lead, women aren't just participants, they are the architects of change. Let's uncover this remarkable initiative by Amphi West Bengal and SIDBI SRF.
আমি কাকলি দাস হাওড়া জেলার পাঁচলা ব্লক থেকে এসেছি। আমরা একজন সংঘ সমবায়, আমাদের এটা প্রজেক্টটা হাওড়া জেলা পরিষদ থেকে আমরা স্যানিটারি ন্যাপকিনের মেশিন পাই। সেই স্যানিটারি ন্যাপকিনের মেশিনটা আমরা সম্পূর্ণ হাইজিনের মাধ্যমে আমরা তৈরি করছি এবং সিডিবি এবং এমফির আসার পর থেকে আমরা এই কাজটা আরও ভালোভাবে করতে পারছি ওনাদের সহযোগিতায়। থ্যাংক ইউ সিডিবিকে এবং এমফিকে।
But otherwise, you are a full-fledged NBFC.
For the question, first things is that obviously, you know, if you look at the MFI lending model per se, the MFI lending model, though on the face of it, it is does not have any collateral, but what we use the concept of having a social collateral, right? Wherein, you know, in a group model, you know, your personal equity or personal discipline of payment is your social collateral, which is enforced by the group. And if you fail to do that, then though not might be the exact, but you know, theoretically they call it social penalty, in the sense that the other group members also help to keep the entire performance in track. And it is quite amazing that in many cases, especially what we see in our portfolio, the performance of the MFI book as well as the JLG book is absolutely pristine. You know, me personally, having my background primarily from urban finance for many years in banks, you know, it was quite an eye-opening saying that how this particular credit behavior is maintained. And when we look at moving from there to individual lending, or maybe, you know, like individual liability loans, two things which I think as an industry we need to do. First is obviously, you know, these are like very commonsensical things that we all lenders, you know. First is ability to pay. Income estimation, whether we have the right income estimation. And last but not the least, you know, the sort of the willingness to pay, wherein whether the behavioral track for payment. Many of these women have been exposed to JLG format loans or MFI loans, which in our opinion does not give the full flavor of ability and willingness to pay, because the dynamics of group lending is very, very different from individual group lending. So the way we in L&T Finance are actually approaching this is that we genuinely, for example, a person who has taken second cycle, third cycle, has established a great amount of credit behavior for a 3 to 4 year period. We
size loan, so of course we need to not only provide the MFI loans, we need to provide the full financial services, several other product needs. That can be your two-wheeler, that can be consumer durables, that can be a business loan. So of course there is a requirement for a higher ticket size loan from the customer. But the problem is, like as the recent, the RBI guidelines requires us to maintain the overall household income of 3 lakhs. So going above a 3 lakhs is definitely a issue, because those customers who are having a relationship of 4-5 years are normally moved above the 3 years old threshold. So there is a requirement to give us the individual loans to these kind of a customer. But of course, once you move from group to individual, it comes with the risk, as the sir was mentioning, that the social security no longer will be there. But of course, whenever we are moving, we'll have to come with the existing customer only. We don't need to go to the open market and do the individual lending. Whenever we do the individual lending, we'll have to follow the 3 things. That is, we call it a product, people, and the technology.
Like this, one example, we have to think more on this. We have to segregate that what is their stepping in the retail world look like, and once they master that, then they go into more kind of a PL, BL, high ticket PL also maybe kind of areas, right? But it also helps the underwriters, because from a bureau perspective and any bureau perspective, that when you ping the bureau, you get the footprint of the person both in the retail and if she has had any footprint in the MFI bureau. So a lot of times when you are lending even at the bottom of the pyramid and you want to lend for say a two-wheeler, you will find that there isn't a file in the retail, but there is about a 6 to 7 year presence that the individual has had in the MFI. So it helps in underwriting as well.
2008 and way before microfinance crisis that Andhra Pradesh crisis hit us. It was very clear from our field visit, etc., that customers who are taking 5,000 or 10,000 rupees loan 2-3 years back, their aspirations are increasing. And giving higher ticket size loan without doing very good right assessment is a risky thing to do. So for that, 2008, we started this thing, but it is a slow cooking food. It cannot be grown in a very faster way, like we do in group lending business mostly. After crisis, we stopped. After microfinance crisis, we stopped this individual lending. Again, started in 2013, 17. After COVID, we stopped it again, and then after demand, we stopped it again, and again we started individual lending. But the good thing was that in 2017, after the demand, we saw the performance of group lending business and individual lending business was simply different.
Products to envisage, to ensure the future India, that Viksit Bharat by 2047 and 5 trillion economy by 27 or before that. And the experience with SSGs, that played a vital role because if we look at the data points, that increase in women participation in labor force, particularly in rural areas, has gone up by 19% to touch 41%. This is the recent, in last 5 years data. From 18 to 23, that has gone up like 19%. Overall is also women participation has gone up to 37%. Semi-urban, urban, rural, everything. So the participation of women is a must if we want to achieve whatever Viksit Bharat or say 5 trillion and call ourselves a developed nation. So in that regard,
the vulnerable segment having low income with a little or no literacy level. So in the for them making awareness about the digitizations, that is one of the key activities that is going on, and further making them understand its importance about the continuity of the maintaining the cash within their bank account, and through that particular account then further through the digitizations mode, making the repayment using the MPOS or UPI or say the Vim application, which is very much acceptable nowadays, is really appreciable. What exactly I just wanted to light upon that the microfinance institutions, they have digitized the process like a lending disbursement process in the 100%. The entire lending to the direct customer's account is going on 100% to the bank account of the customer itself. And a significant portions of the customers, they are repaying through that particular applications that I quoted recently. And additionally, the institutions, they are very much focused on the particular digitizations transformations, and they are making investment on within their infrastructure. And that is the reason the data security, what exactly you have recently quoted, the data security, personal data security.
Again, very pertinent question, and of course we know that Digital Personal Data Protection Act is already there, and there's a lot of guidelines which explains us as to how we have to manage that data. And first you talked about digital transformation, with how we explained that most of the companies have moved towards complete digital transformation, and what has that led to is collection of information which is stored digitally and of course in India. But how is it that we are using that information? I think that is what is important. So now with this DPDA Act, what they are trying to say is that you have to give the right to the end user or the customer. Be it, it can be a vendor, it can be a customer, it can be an employee. They should control how their data is to be used. It is not you who is going to control how that data is to be used. You are just collecting that information and storing that information on behalf of the customer or the stakeholder, let me put it that way. But they should control how it has to be used. Therefore, to provide them facility to add, edit, modify or delete PII, personally identifiable information.
Process of MFI is If we see, we can just break at 4 points we are digitizing the data. Number one is the office automation, what is told, the digitization of our records. Number two, when we make payment disbursement and we collection. And number three, the KYC. While doing KYC, we are digitized KYC we are doing. Now coming to this digital protection, personal DPDP Act applicability to all our processes. If we see, it is applicable to the KYC only, where the personal data we are storing. And on that, there has been provisions and there are very stringent provisions for also. The penalties, they vary from 50 crore to 250 crore if we breach any provision. And among the provisions, there are a few provisions like they say finance.
Thank you, Alok, and thank you, Afi, for giving this opportunity. If you see the DPD Act in itself is a very small, objective that the data collected should not be transferred. A person is a position of the data, he has to ensure that the data is not transferred and data is not breached. And the data, if the transfer is not to be transferred, there is a consent clause, what my earlier speakers have told. But these three sentences have a lot of meanings. Once you are having a data, as a microfinance, we are in the position of the various data by the employees or of the clients. These data we used to transfer to credit bureaus, we used to transfer to agencies, also to the insurance agencies. Now it is up to them to protect the data. So data protection is not only our responsibility, data protection is also the responsibility of the risk bureau, of the credit bureau, of the insurance companies to whom we are transferring. That is one thing. Second thing is the consent clause.
Who are participating. So this is a big opportunity for us. We thank AMFI to give us this opportunity. And particularly, we are interested to increase our penetration in the East Zone and also contribute in your journey to empower the last strata of the economy for sustenance economical growth by mitigating their risk through our insurance products, by associating with you all, and more particularly, we are nominated by IRDA as the lead insurer for the state of West Bengal. So particularly, we will be interested more to associate ourselves with the West Bengal microfinance operators. And post this summit, we will be approaching you also to have a one-to-one discussion. So I will quickly take you through the introduction of my company. So Chola MS is basically a Murugappa group of companies and having a joint venture with Mitsui Sumitomo of Japan. The Murugappa group, as you know, is a more than 100-year-old business conglomerate having a diversified presence and particularly in agricultural, engineering and financial sectors. There are 29 different companies within our group and a few renowned brands you must be knowing. BSA SLR cycles, Hercules cycle, fertilizers, Grow More you must have heard. So Godavari fertilizers, Coromandel fertilizers, Tube Investment, Carborundum Universal, and in the financial wing, Cholamandalam Investment and Finance Company and Cholamandalam General Insurance Companies are the financial wing of the group. Our company has been consistently growing with a CAGR of 22%, and we have a pan-India presence, and we are one of the top 10 private insurer companies in the country. We have 196 branches across, present in 308 districts of the country, and we are
BIAD, many of us might have visited. That is a learning center of NABARD. This is located at Lucknow, and we basically do three things: training, research, and consultancy. And we provide training for all rural financial institutions, including commercial banks, private banks, small finance bank, microfinance institutes, NGOs, governments, international participants. And we draw faculties from the senior officers pool of NABARD, subject matter specialists, and sector experts. We have a panel from different sectors, and we call them, and we are fortunate, we have many times listened. In fact, Tamalda has graced our institute, and likewise, many experts we call there.
This, so that company can be sustainable, even a small company also sustainable in a long way. Slowly, if the benefit is there, slowly it will pass on to the customer, that is there. Third is that fire, as sir told clearly, the fire calculation, that is the income level actually. When we are talking about the fixed obligation to the customer, it has been paid to 50%. But this 50% is compared to all this, whatever the loan you are having from bank, from NBFC, whether it is bike loan or any other loan you have taken from that customer. So this can be taken care of. So that over-lending, even that over-lending, and I will tell that it is a burden to the customer also, it has been minimized. It has a positive outcome. If you see the portfolio of this last 1.5 years, it has been changed. And moreover, I will also given another good thing. Though it is effective from 1st April 2022, but they have been given a leeway to 1st October 2022.
The price cap being removed, I think in an indirect way the RBI said that go ahead and expand the industry because we want the funding in the industry to not come down. So I think that's an indirect kind of a message. And my view is that there is one open-ended item. So while the household income has been capped and the obligation has been kept at 1.5 lakhs, the non-MFI loans could become a problem at a later stage because a housing loan with a longer tenure, how do you deal with it? A gold loan with a bullet repayment, how do you deal with it? So the RBI said that every board should have their own policy and they should decide. But at some point, if because of this, it ends up with the indebtedness level of the customer going up, I believe that the RBI will step in.
I mean, banks share in the entire scheme of things. So, whereas bank share has come down from 40 to 31%, whereas it has grown year on year. So that is one data point which I would like to say. Second one, from the refinance, as a Nabardian or having worked in the sector from Nabard side, I would like to take 3 pointers which I have. First one is definitely the cost of fund or the cost of borrowing by the MFIs and to the end borrowers. If you see, definitely it's on a higher side.
How judiciously they should fix the pricing, because it is all now without cap and it has given to us, RBI has given the responsibility to the board to fix the pricing. So that way, as a state association, what we did, we had in collaboration with Sadhar, we made an orientation program, online orientation program, virtual one. Followed by that, we had our own virtual program with the member MFIs in the state level. And also we visited some of the smaller MFIs. Those who are, and bigger one are, there are only a few, 6 or 7 homegrown MFIs in Odisha. Out of that, remaining are of national level MFIs based at out different metropolitan cities, and they are operating there. We didn't go, but we visited to the smaller MFIs and tried to explain what this framework is. So that added one of our responsibility to the association. We explained that, and in some cases we had to have the orientation for the staff on the operational aspect of the this framework. So we, detailed it out at our level. Then we went and visited the smaller MFIs and met their board, and we sensitized them on how best they should act upon judiciously.
To microfinance institutions and for affordable housing, as well as few of the NBFCs who are in SME sector. This, as he said, is giving diversification. And if we look at the matrix that we operate in, we have three broad matrices which we look at. One is the risk, one is the return, and third is the impact. Though I'm saying the word impact last, but that is the most important aspect for us.
But to public sector banks, we keep it 2% higher, 17%. But the MFI, for all practical purpose, it is much more than the 17% on an average. And regarding the delinquency, the gross NPA percentage and net NPA percentage, there is a criteria given by the Reserve Bank of India. And most of the public sector banks, they are maintaining that criteria. It is a net NPA percentage, it should not be more than 3.5%. And gross NPA should not be more than 5%. And the most important thing, what we see is the asset under management, AUM base. For the MFI sector, there is a, from the risk management angle point of view, we have a ceiling AUM of 500 crores and above, 500 crores and above it should be normally. And what you have done in the past, if it is our existing client, existing MFI, then we can go for the relaxation. Of course, we go for the relaxation. There is we go for the deviation also. We have a different delegation power. So we give the town lending facility. We see the capacity of the MFI, its reputation.
Two things stood out. One is our presence in the east and the northeast. In fact, it's only the branches which are 8 or 9. But if you see the branches that our partners operate for us, we call them customer service centers. They probably are close to 60 already in West Bengal, just to keep it at West Bengal. If you take Bihar, Jharkhand, and the northeast, it will be far more. That is one. Second, thank you for saying partner, because though officially it is said as BC or business correspondent, we always speak of partnerships. There are two ways in which we look at this, apart from expanding physically and geographically. One is that we do term lending.
Thank you so much, Amphi West Bengal, for having me here today. I think I'm reconnecting with associates. I have worked in West Bengal for 6 years, and I have worked with all of them, but on a different plane altogether, where we were giving grants from NABARD or equity support, a soft support under the MFDEF fund. And we had also sponsored like exposure visits to Bangladesh to learn the model and come back here, then supported with the 3% equity loan, soft loan, so that MFIs, like the NGOs, can become MFIs actually.
First of all, I would like to thank Amphi for inviting me here and giving me this opportunity to speak and put forth what NABARD feels about the microfinance industry. Now coming to your question, Saibal, you asked me what is NABARD's experience with Sadhan. If you see that NABARD has 3 core functions, which is financial, supervisory, and developmental. So I will not dwell upon the financial and supervisory function, but is the developmental function that actually takes precedence over everything when it comes to our emotional engagement with our constituents. And one of the first is that we engage with lot of across industries. We have 5,000 channel partners, we have civil societies, we have central government, state governments, but we also need the sector associations like Sadhan and MFIN, because if you realize that in the MF industry, we first started the movement with the SHG, which was also in association with another civil society organization, Myrada, and as you know, rest is history. And that gave rise to the entire, built up the microfinance industry.
I will first share my company's experience with microfinance. Right now, we have been associated with a few major microfinance groups. The oldest relationship is with Muthood, where we sold our NatCat products, as well as the product combo what I showed you, which is consisting of the fire plus personal accident plus EMI cover. And the experience has been with the customers, basically the service experience has been quite learning in serving the remote corners, particularly at the time of claims, catastrophic losses.
As a lender, we feel that the power of networks is something that everybody understands. On a lighter note, whenever we attend any event or conference, there'll be more people outside networking than inside, because that's the power of networks. Everybody understands that.
I just talking about the Nepal Microfinance Bankers Associations, as well as the development of the microfinance in Nepal. So just here, so Nepal Microfinance Bankers Associations is a non-profit institution established in 2006, and this is the apex network of Class D microfinance institutions licensed by the Central Bank of the country. So with the membership, all of the microfinance, all of the 57 microfinance working in Nepal. So NMBA purpose is to promote the microfinance sector in the way of the sustainable and the established conducive environment for the client and the staff protections. So the key objective of the NMBA, coordination, support and lobbying concerned agency towards policy formulation for conducive cooperation of microfinance sectors, coordination with central, province and local level government, parliament committee and the parliament members to understand the issue and challenges facing microfinance institutions, playing a vital role to strictly implementation of code of conduct developed by Nepal Microfinance Bankers Associations and the promotion of financial literacy and enterprise development. Build the capacity of microfinance institutions in coordination and partnership with the international and the national network and development institutions. Strengthen CIC system, CIB, credit bureau systems, share information, knowledge and promote healthy competition among microfinance institutions with strengthening the systems, and playing the vital role of the staff capacity building and innovation, research and the impact study publication, and manage the grievances of client and staff in coordination with the microfinance institutions.
There is a different kind of world where there are development institutions like NABARD who talk almost in our same language. I said almost, there is some differences that I'll come to later on. They talk in the same languages. There are impact investors who talk in our languages. There are some impact investors who profess to talk in our language, but unfortunately are not impact investors. So here, I say that, the microfinance, in your last Mumbai meet also, I did mention, and most of them were not there. If somebody was there, it will be a duplication. Like how many of you have seen that movie, Chalti Ka Naam Gaadi? My age, I think very less people must have seen that movie. And that you have seen that movie. If you have not seen, please go back and see Chalti Ka Naam Gaadi. In that there is a song, in which Madhubala is describing the sky, the moon, and everything, and she is actually showing the positive side of the life. But there we have Kishore Kumar acting, and he's crying, bowing down on his knees. De de mera 5 rupeya bara ana. So it's like that. We are telling the bankers, we are telling the impact investors, we are telling everybody that look at the poor, we need to help them, we need to be besides them. So what if COVID has come? If we help them a little more, they will come out of COVID, But ultimately, my experience, I have repaid 1,450 crores to my lenders on a borrowing of 1,100 crores. The balance 350 crores are the interest, So I have done that. It's the same scene, de de mera 5 rupeya bara ana. So here it is that the association plays a great role, Sadhan plays a great role, Amphi plays a great role, MFin also play a great role.
একবার জোরে হাততালি হয়ে যাক সকলের জন্যে, অসিত বাবু এবং ওনার টিম। এমপি হিপ হিপ হুররে। থ্যাংক ইউ সো মাচ। এবং সর্বশেষে আমি বলবো যে M2I যারা পুরো প্রোগ্রামটাকে ডিজাইন করেছেন তাদেরকে ধন্যবাদ জানাই, এবং সর্বশেষে এই অথরিটিকে, এই হলের অথরিটিকে, বিশ্ব বাংলা কনভেনশন সেন্টারকে ফর অল দ্য সাপোর্ট, সাউন্ড সিস্টেম, লাইটস, এবং অজস্র ধন্যবাদ যারা মিডিয়া থেকে এসেছিলেন, কিছু কিছু মিডিয়া থেকে এসেছিলেন, তাদেরকেও ধন্যবাদ জানাই। ভালো থাকবেন, ভালোভাবে ফিরে যান, শুভরাত্রি, ধন্যবাদ।